Hi, I'm Kathy. Welcome to a beginner-friendly exploration of financial institutions called banks. Whether you're embarking on your first financial banking journey or looking to strengthen your financial knowledge, this video is your gateway to unlocking the mysteries of the U.S. banking system. From deciphering bank fees to navigating the world of interest rates, this comprehensive guide will empower you to make informed decisions on your financial path. Then stick around at the end to see if you can answer 3 questions about banking. So let's make learning about banking the coolest thing that you do this week. There are many types of banks: commercial banks, credit unions, and online banks. Commercial banks are the traditional banks that offer a wide range of financial services, including savings and checking accounts and loans and investments. Credit unions are member-owned financial institutions that offer better interest rates and lower fees. However, membership eligibility may be based on factors like your employment or the location of where you live, while online banks operate primarily online, providing digital services without physical branches. They offer competitive interest rates and lower fees because they don't have to pay for physical locations. I describe all about banks and credit unions in this video, so be sure and click on it to find out more. All banks offer generally the same basic banking products like savings, checkings, and CDs. Savings accounts are designed for saving money, typically offering interest on deposits. This is a good place to keep money safe and available for spending at a later date. Because your money is going to earn interest, it's going to make money for you, and you can save for a long-term goal, earning money while you're safe. Emergency funds, vacations, and home repair should be planned for and financed this way. These accounts are federally insured up to $250,000 per person per institution or bank. If you put less than this in and the bank fails, your money's safe. If you choose to put more than that in, the amount that you put over $250,000 is at risk. FDIC insures deposits up to that certain amount, providing you confidence and stability in the banking system. Checking accounts are transactional accounts, and they're used for everyday expenses, often providing features like debit cards, fund transfers, and check writing capabilities. They're meant to make access to your money easy. Banks sometimes do charge fees for these services based on the amount of money that you put in there, so check into the costs before you choose a bank. You'll also need to keep an eye on your balance, so if you write a check for more than you have in your account, you'll actually pay a fee on that overdraft. And if you don't have the funds for the check, that means you're paying a fee on funds you don't have. It's kind of an old joke that people keep writing checks even though they don't have enough money to cover them, because the number of checks you have has nothing to do with how many checks you can actually write. Having your paychecks deposited into your account so that the funds are immediately available to you is a good plan, while debit cards and ATMs make money getting out easy for you. Debit cards are different from credit cards in that you're drawing money out of your account and not borrowing against it and paying interest. But you have to have enough in your account to cover the purchase to be able to use it. They also offer a savings vehicle called certificates of deposits, or CDs. And these are time deposits with fixed terms and interest rates. And they provide higher interest rates than a regular savings account does because they're going to hold on to your money for a period of time. These accounts are safer than stocks and bonds and offer better rates than that savings account. You get better interest rates because you'll be required to keep your money in for a set period of time. CD rates can be 3 to 4 times what you actually earn on a typical savings account. So be sure and shop around for the best rate that you can find. And finally, although you lock up your money in a CD, the options for getting out early are available. You'll get a lower return. You'll end up getting a lower return if you take it out early. Online banking and mobile apps offer both convenience and security for your accounts. Convenience include online platforms and mobile apps that allow you to perform various banking tasks from anywhere with an internet connection. You can check on your account balances, find any errors, and even see any upcoming deposits or charges that you might have that's going to hit your account. And that will help for planning purposes. You may choose to receive paper copies of your statements that you can see, or you can choose to see them online. These are the documents that show you all the credit, the money in, and the debits, money out, that your account has. It's a personal choice whether you get paperless or paper copies, but make sure that you check whichever one is best for you you so that you can at least check monthly to keep up with how much money you have. Most banks will also allow you to set up notifications when any or all of the following things happen in your account. A deposit is received, a payment is made, if your balance falls below a certain dollar amount, or if your overdraft has been activated. I personally receive a daily text each morning telling me the balance of each account that I have. That way I know if there have been any changes overnight or through the day before. Banks make it easy to transfer money between your accounts, or you can actually automate this to happen. Like you can ask it to move $100 into your dream home account each payday, and that way you don't have to remember to do that. For security, you should understand the measures that are in place, like two-factor authorization, that protect your financial information. It's really important to have a strong and unique password for these accounts, and by using any personal information like dates, addresses, or a form of your name makes it easy for hackers to guess this. Instead, choose a long password that includes numbers and letters that you don't use in any other accounts. You can also consider changing them annually, and so use the year somewhere in that password to remind you when it's time to change them. Although two-step verification is one more thing, it helps keep your account safe each time they're logged onto, because you'll be asked for an additional bit of information, and that'll just make sure that it's you trying to access your money. You should also avoid any banking on public Wi-Fi, because for security you're going to want to stick to networks that you know. Debit and credit cards are wonderful tools of banking. There are some differences between them though. Credit cards allow users to borrow money up to a certain limit from a financial institution, like a bank. With interest, it's charged on balances not paid in full each month. They offer points and rewards for travel purchases, and by using them wisely, you can actually build up your credit or hurt it if you use them unwisely. The interest rates you'll owe depend on how many factors, so shop around, because too much reliance on them can easily lead to debt. But they do offer fairly strong fraud protection against unauthorized use. That way, if someone uses your card, you won't have to pay. On the other hand, debit cards are linked to your checking account, and it's used by deducting funds directly from your account for your purchases. It does help avoid debt accumulation because you can only spend what you have available to you. There are really little to no fees associated with a debit card, so if you use your bank's ATM, and there's probably not going to be any interest charged, but ultimately, this card will help build your credit. Banking does have interest rates associated with the money that you save or the money you borrow, as well as fees for not having enough money to cover your check. The APR, or annual percentage rate, is what you're charged when taking out a loan. This will include fees or other additional costs for the loan so that you can compare apples to apples when shopping for a loan. The lender is required by law to provide this information, so make sure you're looking at the APR and comparing one bank to another. This is also how the interest is charged on your credit card, and it has to be provided to you as well. Banks do have some common fees. They may charge for things like overdraft, ATM usage, and sometimes monthly account maintenance costs if you have a low balance. It might seem counterintuitive, but if you write a check for more money than you have, you're going to owe an overdraft fee. This is because you're not keeping track of how much money you have in your account when you should be, and they will charge a non-sufficient fund fee for doing this. This means that if you write a $100 check and you only have $97, you may be charged a $30 overdraft fee and a $30 insufficient fund charge, along with any other fees that the bank that tried to cash the check might charge their client. Sadly, it's not uncommon for the bank to continue to try and cash that check for up to 3 times, so the fees start to multiply each time they do this. You have to keep on top of your balance and consider signing up for balance alerts that might help you with this. ATM fees will accrue too if you use a machine out of network, so keep an eye on those that are convenient to you that don't charge a fee. Credit reporting agencies don't use your bank information on your credit score, but it does use your checking, savings, and loans to determine if you can take on more debt. You can take out mortgages and loans through your bank, just don't use them though because they know you. Shop around for the best interest rates, just like you shopped around the house or car that you're planning to use that loan for. But they do offer mortgages, so make sure that you're checking into them as well as any other lending organizations. And finally, they do offer these loans like personal loans, auto loans, and student loans with different terms and interest rates. So again, you need to shop around to find what's best for you. Finally, it's not uncommon that banks offer financial planning for you. They may be willing to help you with budgeting, creating creating a plan for managing income, expenses, and savings, including investing strategies. But the real concern is using your bank, as they're not really a free financial advisor. They may offer investing services, but compare their fees to other brokers. Because banks offer these services, it doesn't mean it's the best way for you to find a financial planner. I would suggest literally finding a personal financial planner to work with your personal needs. Now, can you answer these 3 questions? What's an APR? Do debit cards charge interest on purchases? And can I write a check even if I don't have money to cover it? This has been Kathy. Thanks for joining me on your journey to financial empowerment. If you're new here, please consider subscribing so that you don't miss any of these videos, and that way you can change the way that you think about your relationship with money.